If you were on the sidelines hoping for a Federal Reserve rate cut today, I'm sorry to say, well, it didn't happen. The Fed just announced it's going to be leaving interest rates unchanged for the fifth time this year. And, well, as you can imagine, it's already making headlines. Now, this discussion just isn't about numbers on chart. It impacts everything from interest rates on your credit cards to how much you pay for your car loan, and even what happens to the housing market over the next handful of months. Now, to add even more fuel to the fire, President Donald Trump has been very vocal about wanting the Fed to cut rates. And this move sets up just yet another potential showdown between the White House and one of the few remaining independent federal agencies. So in this video, we're going to be breaking down why the Fed decided to hold the rates, what this means for the economy and for you. And we're also going to look at what could happen next, including the September meeting that everyone's already buzzing about. So let's get into it. Now, the Fed is keeping the short-term interest rates at about 4.3%, right where it's been since the last three rate cuts. But here's the twist with this here. The decision came despite repeated calls from President Donald Trump to cut rates, and it's already fueling more tension between the administration and the Fed. Now, Chair Jerome Powell explained that tariffs on imported goods are starting to push up prices, and the Fed isn't sure if that spike in inflation is temporary or if it's going to stick around. As Powell put it, that is a risk to be assessed and managed, and cutting rates too soon, well, could fuel inflation further, while waiting too long could hurt the job market. It's a balancing act that the Fed clearly doesn't think there's enough data yet to make this move. And the decision, well, it wasn't unanimous. Two governors, Christopher Waller and Michael Bowman, actually voted to cut borrowing costs, making this the first time in more than 3 decades that two Washington governors or base governors dissented. Meanwhile, 9 officials, including Powell, voted to stand pat. And with Governor Adrian Kugler absent, it shows there's growing divide within the Fed itself. So what does all of this mean if you're thinking about buying a home, getting a car loan, or just trying to pay down your credit cards? Well, when the Fed cuts rate, borrowing costs on things like mortgages, auto loans often drop, but that's not happening just yet. Markets had hoped for a rate cut in September, but Powell's comment, well, it poured cold water on that idea. He even said, we have made no decisions about September, and that uncertainty pushed major stock indexes lower immediately after his remarks. So let's zoom out here. Inflation is still above the Fed's 2% target, and the job market, while slower, is still relatively healthy. And that's why the majority of the Fed believes keeping rates elevated is the right call for right now. But there are risks. Job growth is slowing, with just 74,000 jobs added in June, and that's excluding government hiring. And tariffs, well, they're continuing to push prices up for consumers. Now, some economists think that we're going to see a rate cut by December, but others warn that political pressure could start playing a bigger role as President Trump continues to push lower borrowing costs, especially with Powell's term ending in May 2026. Bottom line is this: the Fed is holding its ground for now, but there's a lot at stake heading into the next handful of months. So we'll certainly be watching the September meeting closely, because any shift in policy could affect everything from the stock market to the interest rates on your next loan. So with all of this said, what do you think? Should the Fed have cut rates right now, or are they making the right call by waiting? Drop your thoughts in the comments down below, and if you found this breakdown helpful, well, hit that like button, subscribe for more updates, and I will see you in the next video.